Hello traders, good morning, good noon, afternoon, and happy Monday, happy new week to everyone. Charles, thank you very much, and don't worry, we will have much more of these live sessions. Weekends are too short, Roshin. I totally agree with you. But you know what? They are short, so we value them. Imagine that it was the vice versa. In about 2 or 3 weeks, everyone would start to complain, right? Weekends are too long. Too much time with whoever it is, right? So it's good. It's good they're short. We really value that. You see, Roshin, we agree. Oh no! On weekends we cannot be bored anymore. We have new markets, the cryptocurrencies available. Trading goes on, so those who love to trade have all the reasons on the weekend as well. Well, of course, if you want. All right, so hi from Canada, Ontario, guys, and wonderful Monday, wonderful week to everyone. I can see some new names with us today, so guys, welcome on board, welcome to our family, and I hope you will find here exactly what you are looking for your trading. I would like to start quickly to repeat that as I do on every Monday. Um, the idea here of live rooms is very simple. First of all, there is a trading report. Okay, here we go. Voila, nice to meet you. Trading report. We have two of them every day between Tuesday to Thursday, and on Monday we have one because we have only one session. Um, the idea here is simple. We analyze the market and we set our setups for long, for short, for none, or for both. That's what we do. Okay, so on some pairs, if you scroll lower, you would find out explanation here. If we're looking for buy, what we're looking for sell, and some we're looking for both. Now, where we have both, most of the times, we have also current momentum, which is explained here on the top in the comments. Okay, you scroll here, and all the instruments are explained here a bit deeper. Okay, so this is the report. If you have no idea how to use the report, please watch this video. It's exactly for that cases. The idea is very simple. We prepare our trading week, which means we go over the market, over all the instruments. We analyze the weekly and the daily cycles, and according to them, we choose what's long, what's short, what's none, what's both. After that, we are looking for setups. So basically, trading for us is always in 3 steps. Step number 1, looking for levels we get from cycles. Step number 2, confirmations. We are looking for a reason for our idea to be correct, activated. Normally it is appeared by divergences. Sometimes we use also extra things, candle patterns, psychological levels, etc. And then we're looking for step number 3, which is trading. Trading is based on setups. Setups are coming in different market conditions. Normally, in cycle setups, they are very simple. We have 2 ways for setup to be activated: false breaks and momentum, which is higher highs, higher lows in a new trend developing, or 3 little waves in the favor direction, 2 waves as a correction, breakout, and continuation. If you have no idea what I'm talking about, exactly for that, inside the report, you have here recommendation for the must-watch media webinars inside the media zone. The must-watch, they're all great. And the most important ones you have to watch would be the cycles and the divergence, because that's what we do in the live room. We prepare our plan according to that. From that moment, once you get your confirmations, you get your directions, we trade it. How do we trade that? Everyone with his or her own systems. If you use my system, then my systems. If you use any of your own system, then any of your own system. I really don't care, because what's most important in trading is try to choose the right direction and the right timing. And this is exactly the goal of this club and of the live trading rooms, to teach on live occasions, day after day, what is a good momentum, what is a good scenario, what is a good setup, and most important, what's a good timing. And on every day we have some new challenge from Mr. Market, some new scenario, something new to discuss about. These situations define timing. Let's admit it. 99.9% of the traders suffer from what? From timing. among the other things, right? Timing is crucial, and everything in life, especially in trading, because you can choose a direction exactly correct. You can try once, twice, thrice, fail because there is no reason, there is no good timing. You will give up, and then the market will move. If you look back in your history of your own trading, you will figure out this pattern coming and repeating itself over and over many times. You choose the right direction, the market is moving as you want, but without you. Right? That happens to everyone. That's okay if it happens here and there, because we cannot be everywhere all the time. But it's not okay if it happens all the time. And this is exactly what we need to change. So choosing the right direction and timing is crucial. So welcome on board. What you will find here, guys, the new guys. That's completely different trading. That's not what. It's not going to be. Okay, you see the resistance here, guys. Sell. You see support. Sell. Trendline breakout. Sell. No, we're dealing with the real market. We're dealing with real conditions. Conditions change, so accordingly our plan. This is exactly why we have validation levels and invalidation levels for every single scenario. Trading has to be on the most professional level, and this is what I try to do here in Traders Academy Club, to show you how it is done in the real time. If you apply these things, you will start to see immediate results. So the bottom line here is very simple. Trading is not just a strategy. It never was, it never will be. Trading is the real deal of choosing correct direction first of all, have a read from the market first of all, and then trade it, or not trade it, because many times the market simply telling us what? Don't trade. It's not good. It's not good conditions, right? So that's all basically. So welcome once again. Watch the webinars I suggested that you can see inside the trading report. Make sure you watch the trading tour video, welcome tour, video tour, call it whatever you want, inside the members area. And that's all. Attend the live rooms, and you will slowly. That's very important to understand. Magic is not going to happen tomorrow. It's not like up and I make money. You need to go through these steps, the steps of growing, we call that, and you will become better. That's the idea. And remember, very, very important, there is never better day to start your successful journey than today. Everyone always is busy with saying tomorrow. Today I'm too tired, my kids need to sleep, I don't feel too well, my head, my stomach, my dog, my, right? We all live in this life. We all are busy. We all have our things. There is never better day to make things happen than today. Never, ever. There is never good timing for something specific in life than today. Okay, and I don't mean exactly right now. Of course, there are occasions in life that simply postpone our things. But the reality is, you want to start, you want to do that. Go and do that. Besides that, on the bottom, if you scroll to the bottom, you will see here the invitation to our Telegram groups. Okay, and that's the idea. Join us here for all the 4 groups if you would like, or choose your ones. That's all. So let's start, guys. This report would be sent after the live room. We finish, record, upload, make the report, you get it. Okay, that's all. So let's start talk business and let's start talk trading. The week starts pretty much interesting, I would say. Things are moving on the majority of the pairs, which is good for us, of course. What I will do is, because we always follow up our report, this is the last report we had from last Thursday. I will go over that pair by pair to make sure we don't miss anything. So instrument after instrument. Just one last thing. This report, this session on Monday is basically the longest one. So we prepare the entire week. So I need your focus. If for any reason you lose your focus, you need to go, you need everything, come back, watch the recording, which will be shared with you later on. Okay? But make sure to watch it because we prepare the plan for the week and we follow it every single day. If our levels validated, invalidated, continue, plan change, whatever it is, that's exactly what we do on the next days. We follow up and update our plan. Where it's good to cash out, where we move stop loss to break even, and so on, and also when we change and switch directions, because that could happen. So let's start. The first one is here. After each pair or serial of pairs, I stop for questions. So if you have any, guys, I give enough time for that to ask. Okay, prepare it, ask it, I reply. All right, so let's start with the euro pound is our first one. No, you know what, low. We have all the euros at first. Let's start with the euro dollar. Euro dollar for the long run still has 2 options possible, which mean very, very simple. We are going for 1, 2, and then very likely for one more push higher, or we are going for, let me just erase that here, 1, 2, 3, and then deep move down. Both options are in play. The second option looks maybe more logical somehow because we also have a bullish hidden divergence here. So there is a great potential forming for buys. Now, on the daily chart, we were short because the daily chart shows exactly the opposite. It was a special cycle on daily with 2 false breaks with convergence, lower lows. So we were shorting in this scenario until we reached what? Until we reached the bank zone. Here we go. This is our bank zone that we selected in between 116 to 115. And I say zone because in trading, it's never about a level. Trading is about zones. Market is never Mr. Perfect. Reach the exact peak and move in your direction. Right? So the next time you see someone saying, you see, I catch a top or bottom right from the peak, you just know it's good. It's a good luck. It is a good luck. It's never something to rely on. Okay, in trading, it's always zones, and this was our zone for possible reversals to the upside. Then we dropped lower and we started to look for reasons for the buys. On all this journey from here through here, we never had any reason for buys. As simple as that. But then one thing changed on last week, and that was this. We got 1, we got 2, and we got these 3, which makes it very, very simple, possible for longs. Now it looks like it is making possibly a special cycle here. Now these longs are on, but we do need to be careful here on this area. Why? Very simple. Very, very simple. We go back to the 4-hour chart because this is where we started from looking for our buys. We had this false break. it was only one false break to the upside, and that means that and now we are rallying. If we are rallying and we are reaching the previous high, what that could turn to be exactly a possible top, a false break, and a range. That's exactly what could happen here. Range is defined by two false breaks in a row on the same direction or on opposite directions. We had one on the bottom ending this move down. Now we might have one on the top. In that case, that would be opposite directions, creating a range. So for this area, we need to be very, very, very careful. So those who are long on the euro dollar, this would be a very good place to look for cash outs. Reason for cash out starts to appear. Divergence developing, right? We can see that right here. And we can see that the highs, every time we try to create a high, this momentum is lost, right? It immediately retraces down. So that's a warning sign. If we reached here, this area, and we start to create false breaks on trend line or false break on horizontal, a bounce from psychological level of 117. This is a very psychological level. If we get these signs, it is a way for Mr. Market to say, hey, Mr. or Mrs., get your money, because there is a good chance we are for correction down from here. For us, the game will not be changed, because inside the range or not inside the range, for us, we are after short-term buys after it traces. So if from here or from the current moment we get two waves down, we will be looking for what? For a breakout out of it and further continuation. That's a very, very possible scenario, which is very likely the euro dollar is moving based on. Okay, so we are keeping the longs, but we are running out of the steam. We do need to pay attention to this trend line going through all the highs. We do need to pay attention to this trend line going through these highs a bit higher, and this is basically the critical area for the euro dollar, and we are talking about the zone of 117. We reached that. It's a good time to cash out if you are long, and let it see, because on the short term most likely it will start to move down. The down that later on we might be looking again for longs, right? So if we have this top and it starts to make this, and after that we will be looking to re-long and join the next momentum. Okay, Alcos, very good. If you already cashed out, perfect. Okay, now we also have to remember, guys, here the very, very simple thing. As I said before, this is a special cycle from the daily. Special cycle means what? First leg and last leg are pretty much equal, and the middle leg is twice or thrice each of the legs. And on such cycles, there is a great chance to see the pair dropping all the way down to the 50%. Now we were next to 38.2. This is exactly why it was so great level for a possible reversal. But technically, we can get even the 50%. So the short that we were talking about right here from the zone of 117 could start and develop further to something deeper. All right. Now for safe play, we do have this trend line. So if we manage to cross this area and breakout, that's where our short could start and take place. It starts from short-term short due to the scenario, but who knows? It could go and develop further. All right. So this is our plan for the euro dollar. We accept both. The current momentum is yet bullish as long as we don't get false breaks, convergence, so which means as long as we don't start to get fake high and lower lows, or at least as long as we don't break and hold below the trend line, which is currently following us further. Now, for those of you who love, I know this method is very loved by traders. For those who do trade the multi-time frame trend lines combination, this is basically what normally is done. Okay, you find a trend on higher time frame. You find a trend for a trend, right? You find a trend line for a good definition of a trend. You find a corrective trend line on the lower time frame, and this is what you trade on the breakouts. Personally, I love this method. It's amazing method if you go with the cycles from the higher time frame. Because if you just try to apply that regardless what's happening on the market, it will never work. Never work. It will be just another method. But if you do apply that in the cycles read, this method is really powerful. For those of you who do know how to deal with trend lines and respect them. Okay, this is very powerful stuff. So that's for the euro dollar. Now our next one would be the euro versus the pound, a pair we are now I want to talk to those of you guys who've been here on the previous week. Remember what we said here. It's very critical here because I want to remind you this and you to see what's happening. All this move up, we said previous week that this is not a cycle, it's just one leg, right? Because we never got anything like that looks like this. Move, correction, move, correction, move, correction. It was one leg, just one leg. On the move down, we got same, not even valid correction. Here it's not valid correction. No two candles rules. The previous move, two candles high breakout, never happened. Here it was straight move down. If we got one straight move up, one straight move down, that's a way for Mr. Market to say what? Hey, there is no big money inside. The big guys are not playing that. It's a V pattern, shaking pattern, clearing pattern, call it whatever you want. And if you remember, guys, what we said here, that the next move should most likely be very ranging and confusing. Like this. Move up, false break. Move down, false break. Looks like a range. No. Move up more. So what's next? Very likely something like that. Now I would be careful with the euro pound in specific, but also with all the pound pairs. Why? Because we have critical news for the pounds this week. Let's have a look here. This is our week, and look what is coming for us. CPI from Britain, which in the last couple of times was good growth and boosted up the pound. Speech from Draghi, speech from Carney. Average earnings in Britain, and retail sales in Britain. Later on Thursday, another speech from Carney and another speech from Draghi on Friday. So this is really effective, of course, on the short-term view, and that's going to happen this week. Okay, so for us, the euro pound, after the promo, for us the plan does not change. We want long-term sales because we are at the end of this triple cycle with this false break, beautiful divergence. We do expect it to go down to here. Now this is a weekly cycle, so that's going to take a long time, but it is our direction. Every rally should be sold. That's the bottom line. Now what is good here is this. The first leg that was a special cycle on the 4-hour chart is now ending as a top. So if we can reach here and maybe even false break it like with the euro dollar we saw, that could be an amazing sell call continuation. So to make it very, very clear and simple, we do want to sell the rallies as long as this top holds. How do we do that? We go to, because our cycles are weekly and daily, which are involved, we can trade the 4-hour and the 1-hour chart. Basically, we trade 1 or 2 maximum lower time frames from the cycle time frame. If our cycle is only weekly, then we trade daily and 4-hour. If our cycle is daily, we can trade 4-hour and 1-hour. Okay, so on the 4-hour chart, this is what we need. Since this is our false break, which we saw before, we need 2 waves up. Did we have it yet? No, we didn't. So for us, what could happen here is something like that, and also something like that. Okay, do we have any good reason to trade for now? No. Should we watch out this pair for a great setup to come? Yes. How? By selling every rally. We need 2 waves in order to make a valid ABCD pattern, which means a break above this high. Since we don't have it, the second option is some ranging pattern, right? And that's the bottom line here. Bearish for the long run. That's all. Bearish for the long run. And the deeper this correction could take us, the better this setup should be. That's for the euro pound. Next one on our list is going to be the euro versus the yen. This pair is bearish according to the daily triple cycle. So we have this, this, and this. We had a false break on the bottom, on the top, pardon, and now we have false breaks on the bottom, which makes it a possible range. But what happens now is a false break. This is the big possible range, right? Here. But now we do have a false break here, and we might get another one here. So for us, euro yen is bearish exactly with the same plan like euro dollar and the euro pound. Sell the rallies. The current rallies, because we have the daily and the weekly cycle involved. Our view could be on the 4-hour, on the 1-hour chart. The current rally is providing us this trend line. So if we can push it to the higher areas, we will be then looking for the breakout below to join the new momentum, the regained momentum, and ride the next sell portion. So that's for the euro yen. Now for long run, our invalidation is here. For short run, our invalidation is here. Now the thing here is that, as I explained before, we might have here a false break. So our invalidation of this place, invalidation, is not just by spiking above, but in that case by closing above and hold above. Because if it closes above and then retraces down immediately, we consider that as a false break. Okay, so we need to close above, hold, and continue further, and then we can say that the sell is over. As long as it did not happen, the bearish for us is pressure. Now I want to be very clear here, because new traders normally think that, oh, if we were bearish, let's sell. No. Direction doesn't mean action. Direction does not mean an action. We must be very specific. As I said before, trading is based on 3 steps. Step number 1, level. Where from? Where to? Step number 2, confirmation. That comes by divergence normally. Trendline breakouts in some cases. 3. Setup. Okay, that must be there. Once you get all the 3, you have a valid trade. Remember that. Do not blindly trade. Don't shoot in the dark. Don't try your luck saying, oh, but it does look bearish. So what? So what? Remember my saying, never try to prove a market that you are right. Why? Because the market can hardly bite. Alex, you say the COT report also confirms the EJ shorts. Perfect. And also the statistics, and that's actually true. We have beautiful days coming, right? So let's see. We had a top reason on Friday, which if holds and the short starts today is perfect. If not, our next days would be anywhere 17, 19, 20, 21, 22. That's critical period. If we rally for a few more days, it's getting a very, 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 very critical place for heavy action later on. So let's see. Let's see. We have the levels. We do have statistical confirmation. We do have levels confirmation. We do have the divergence developed from daily. Looks perfect. Thanks, Alex. Next pair on our list, Euro versus the Kiwi, which now is giving us the correction we wanted. Let's make a quickly friendly reminder here. What we've had on the Euro Kiwi, let's start from the weekly. We had triple descending cycle, which is now going by a double cycle correction. The divergence is already here, so technically we are in a bearish play. Daily chart supported the bearish idea from the weekly. This is the double from the weekly. This is the daily. Divergence is here as well, which means it looks great for short. We have the level, we have the confirmation. Do we have a setup for short? And here comes the third step for us. This is a triple cycle. What do we need now? Very simple, corrective cycle. Corrective cycle could be only in two ways. Two waves up or a range, and then we are selling top of the range. That's all. There is no other way corrective cycle could be based on. Impossible. Cannot happen. If anything other happens, it's not a corrective cycle. It's a trend continuation cycle. Currently, wave number 1 is developing. Now here comes the trick. Here comes that trick. We do have a false break right here. We might have a false break right here. That means that there could be a fake sign for a top and start making a sell confirmation. Right? So in that case, we need two clear waves up. Do we have that on the 4-hour chart? No, only one wave up. Let's drop to the 1-hour chart. Do we have anything clear on the 1-hour chart? This is not a good correction. This is not a correction due to two waves rule. This is our last high. Oh, this is a good question. That's a good question. How we combine here the last two higher highs and higher lows created for us the two candles rule, guys. 1 and 2 or 1 and 3. What are the last two candles you think here answers the conditions of two candles rules? 1 and 2, the last two candles on 1 and 3, while 3 is several candles ago. Let me zoom in a bit so you can see a bit clearer, guys. 1, 2, or 1 and 3. Very, very confusing, isn't it? Very tricky. Now, normally, the 2 candles rule are much simpler, normally. But sometimes it gets a hard time. So it's good we go over that. So the answer is 1 and 3. Why? 2 looks perfect, but 2 got invalidation of this. You see what's happening here, guys? It is trying to make highs, it is moving to drop lows, and then we got one candle doing lower lows but never higher highs. So the only 2 that give us clear answer for the last 2 candles is this and this, because anything in between them looks like just a noise here. Imagine you remove them and then you get yourself a clear pattern of 1 and 3 giving the valid setup. Therefore, if it's 1 and 3 and this is our low, this correction isn't valid. Okay? Therefore, the Euro Kiwi does not provide us anything clear to work with as for now. Anything clear for a sell, anything clear for a buy. It looks perfect as from daily and weekly, but it doesn't give us a reason for action in terms of the cycle. So what could happen here is too easy. Something like that. Too easy. On the same is, it could easily stop here on this top, right? And game is over. We'll start to create here a reversal pattern. Can we rely on any of this in terms of cycles? No, and therefore Euro Kiwi is in our waiting list for something clearer. By the way, once you spot that there is nothing clear on the 4-hour chart, there is a very good chance that what will happen on the 1-hour chart would be very, very, very tricky. If it was clear 2 waves on the 4-hour, then 1 hour would correspond. But since that's not the case, we don't have any reason to act here. Alex, what the 2 candles rules? Well, I will remind, okay? Because going over that, it's a full webinar. We have it, by the way. We have it inside the cycles webinars, and we will have it also on the holiday period. Special webinar for that. But the idea is simple. The 2 candles rules is applied everywhere. 2 candles rule is applied on corrections, for false break, for convergence, for trend line connection, for everything. And that goes like that. Very simple. It goes like that. You need the last 2 candles that gives you one condition. 2 higher highs or 2 lower lows. Sorry. The last 2 candles, higher highs and higher lows, or lower highs and lower lows. That's the condition. And what I draw is simple. Many times you would get something like that. And then go and choose yourself. Make something like that. And then go and choose yourself the last 2 candles. The idea here is choose the last 2 candles that gave you clear higher highs, higher lows. That's all. Okay, this is the idea. If you find a hard time defining that, that means there is nothing clear, and the market is in a very tricky condition. And if the market or the pair is in a very tricky condition, that means what? That means what? that the big money is not playing the market yet. Okay, that's the bottom line. Deeper explanation and examples and tests on the holidays. Last Thursday, right? Thank you. Last Thursday we had a live trading room, and I explained this much deeper. So please watch the recording. It was on my session, and watch the examples from there. It's explained pretty well. Okay. So the Euro Kiwi, we are bearish as long as we are below this high. We don't have any reason for current action in terms of cycles. Okay, so there's a good chance we are going to see something uglier developing here. Patience. Short-term rally and correction is currently on. Euro franc, the pair and the headache. According to weekly, we are in non-tradable conditions because we are stuck inside one candle. The same unexpected, unbelievable candle of January 2015, the same one candle that erased $100,000 of everyone who got involved. Even I lost a lot of money there, I admit. Not 100,000, thanks God, but lost 25K on this run. On daily, we don't have any reason to trade because we're stuck inside one candle. So the daily chart is what coming next. According to daily chart, we have this cycle, and that gives us beautiful 2 false breaks. From that moment, we are careful with calling a specific direction. We were only bullish on this ride to 117, 118. You remember this? It was like 3 weeks ago, I think, or so. But since then, we are very, very careful. We need 3 clear waves down or convergence to go short. And now I want to ask you a question, guys. Do we have that? Do we have that? A euro, franc reason for sure. Do we have convergence? Is this valid? No, because this is not a correction. No last 2 candles rules. We are stuck inside one candle. Do we have 3 waves down? No, we don't. Therefore, there are no reasons for only bearish. On the same time, bullish is risky because we are against the daily divergence. Make sense? Technically, as long as this top holds, this bottom holds, we are mainly in a bullish pressure. Break below this bottom could open the doors for a triple cycle and then further correction down towards 113 or so. So technically speaking, we are bullish with the break of this trend line from the daily. On the 4-hour chart, from the 4-hour chart. On the 1-hour chart, we have nothing better here. 1-hour chart doesn't provide anything better. So technically it's still bullish. Do we have any good reason for buys here? No. Marcus, why a triple cycle correction instead of just a double? Double cycle correction provide you trend continuation for buys. Triple cycle changes the momentum from bullish to bearish, and then we will be looking for 2 waves up and sell. And that's why currently, because we have only 2 waves down, the momentum remains bullish. Is that really recommended to be traded? You can see the controversials here. From daily divergence and 2 false breaks. From 4-hour, just 2 waves correction. So it's a way for Mr. Market to say what? Be careful. It's good for a short-term trading, scalping. That's wonderful because both directions are possible. Current momentum is yet bullish. Beautiful. For scalping, that's great conditions. For longer term swing and longer term targets and cycles and directions, no, never. You're very welcome, Marcos. You ask, I answer. Define your question. I'm gonna answer that. Very simple. I'm glad it's clear. Double cycle is a correction. Range is a correction or ending cycle. Triple and special are developing cycle. So if you have on 1 hour chart or 4 hour chart triple or special against weekly and daily, this is normally the reversals signs. Okay. All right, great. So this is for the euro franc, and the last two we have the euro Aussie, which is exactly like the euro versus the kiwi. We need two waves up in order to sell. Do we have two waves up here? No. So far it's only wave number one. Only one. Okay, now for the euro Aussie, the current momentum is bearish as long as we are below this high. We are looking for reasons for one more push further and lower. For longer run, I just want to remind you guys, we are still in this range of the weekly, which means the euro Aussie for the long run can still aim the 160 zone. If we manage to break this top in a straight leg without double wave correction, that's a pretty bullish call that we are going towards 160. Okay, so keep an eye here very, very closely. We are bearish in our preferences as long as we are below this high. We don't have any reason for short. Why? Because we never got the double wave correction we wanted. Never yet. So we do need to be very careful here. Okay? So no clear direction for this one, which means on the short term, both directions are completely tradable. For long term, as I just said, there are no signs for nothing. It's just a noise yet. Euro CAD is exactly in the same conditions. We do have this weekly range, which from my point of view means both directions are in play. On a daily cycle, we have a range by itself, which again, for these two pairs, is for a long time now, but these two pairs are not clear. And if you ask me, are not the best tradable. This is a double wave correction. So from my point of view, as long as this low holds, the momentum is bullish. Break below this low and we are probably aiming to the bottom of this range again. But as long as it doesn't, most likely we are for some kind of bullish move here. And again, I want to ask you a question. Weekly, big range. Daily, small range. Is that the best pair to trade for long run? No, exactly. These are the pairs and the opportunities that we can scalp. We can trade short term because they are volatile. They are in huge range of prices. Very volatile. Okay, we can trade intraday them. We can trade a short term on them. We never can go and trade the weekly and daily cycles yet because they are not clear. Cool. Let's continue, guys. Dollar franc is later on. We are still on the euro pairs. Oh no, actually no. We finished with the euro pairs. It was the last one. So from all the euros, euro dollar, euro pound, euro yen are the best ones to look at, and then come the next series, the second series, okay, of the euro pairs. Dollar pairs. Before we move to the pounds, let's cover the dollars. Dollar CAD, as long as Below this top, we are after sells. I would expect something like that. On the short term, very, very short term, from the 1 hour chart, we got this. Okay, it's too ugly, even for me. We got this. Very ugly. So every little rally here should be a good sell opportunity. Aiming, what are we aiming on our shorts? This is the double cycle, so we are aiming 126 and 125. Okay, so sell rallies is our plan as long as we are below this top. This is our invalidation. Dollar franc, still bullish. Why still bullish? Let's discuss about it, guys. We were in this range, right? Remember this period? Once we got it twice, one was here in a false break, then the second one. We finally regained momentum for higher highs. Do we have a bearish divergence developed here? No, not yet, right? So in terms of divergence, we have no reasons to stop. Do we have any weekly signs against us, like bearish hidden divergence? Yep, we do. Actually, we do. It does start to develop on a daily chart for bearish news, for bearish direction, bearish divergence. On a daily chart, we are looking for confirmations, which means higher highs and lower highs on the divergence here. Do we have anything here in that case? On daily? Not yet. Do we have any warning signs? Warning signs to stop our weekly and daily direction? No, we don't. What's warning signs? False breaks and convergence. Do we have any false break here? Nowhere. Nowhere. Do we have triple wave down here? Nowhere. Yet. Therefore, currently, the momentum for dollar franc is yet bullish. We don't have any triple cycle, not on the 4 hour, not on the 1 hour, to end up the current weekly and daily rally. Therefore, we're still bullish. Okay. If you ask me, it's far from being the best pair to trade. It's far from being the best pair to trade. I still suspect bullish because we don't have any bearish signs. If we start to develop triple cycle down, then we can say, boom, we have it. But we currently don't. And therefore, the momentum is bullish yet. How far can we go from here? Technically, there are no reasons. And the reason for no reasons to stop all that is because of this monster monthly cycle. We at least are going to 38.2, and that's for long term is what? 113. Okay, so I wouldn't rush to be bearish before we have very, very clear signs. Plus, weekly starts to develop bullish hidden divergence. Too many countering contra signs to each other, right? Cycles versus cycles, level versus level, divergence versus divergence. Too many, which from my point of view keeps it bullish and definitely not the best pair to trade with. Dollar yen, bearish for us as long as we hold our top. We are in top of this range. We do have this top. On the 4 hour chart, this is what we get from the daily, right? This is the cycle from the daily. This is cycle from the 4 hour. And then came the beauty, which was called triple cycle down. Real beauty, which make it very simple. We need 2 cycle up, and we are looking for a sell. Okay, very simple here. On the 1 hour chart, we did have this double wave, and that place. Do we have a divergence here? Let's take a look. Yeah, we do have divergence. So basically, the pressure on this pair remains bearish. Our invalidation for the dollar yen is this top, and we are aiming, now listen carefully guys, 38.2 of this cycle, that's 112, and then all the way to the bottom of the daily range, which is here, and that's 108. Okay, so for dollar yen, if we do manage to be correct, and I say if because the market doesn't have to agree with us, right? We have to agree with the market. But if we do have our read correct, we have a chance here to end up on a monster. On a monster. With huge risk reward down. So let's see. Let's see if the market will agree with us or not. Bearish it is while this top holds. This is our invalidation. Okay. Close the gap. Which one? Oh, you are talking this one. the famous 108 zone here. Yeah, it's also on the bottom of the range, exactly. We have a beautiful here. This one, right, Akos? That's the one you mean? Yeah, I've been dreaming about this level also many times. All right, let's see if we can get it. Dollar yen bearish for us with invalidation in clear zone. Guys, any questions as for now about any of the euro or the dollar pairs we have covered? Our next one on the list will be the pound pairs, and then Pacific pairs, and then we move on to commodities and the rest. I warned you guys, this is a long session, so I hope you have the focus and the coffee and the water, everything you need with you. Mondays, we have to prepare the full week, right? All right, cool. So no questions as for now. That means or everything was explained good, or you're just too tired already. I hope the first option is correct. Let's continue to the pound pairs then. Pound dollar is bearish as long as we are below this top. Now be careful here, guys. Why? Because it is on perfect conditions for cleaners. For cleaners. Sarah, 12 a.m. sounds like a perfect time for a coffee from me. 12 a.m. is the best time to wake up for the next 2 hours. Nah, it's joking. If coffee affects you and wake you up, of course it's a joke. So why it's in a great conditions for clearance, guys? Because let's go back to the weekly and daily. I want you to understand the whole picture here. According to weekly, we are in triple cycle, which means we can expect it to go at least to 38.2, and most of the cycles of triple go even to 50. In levels words, we are aiming the 140, 145, 146 zone. So for long run, we are ultra bullish as long as this bottom holds. But, and here comes the but, in order to go long, the daily have to agree with the weekly. Does the daily agree with the weekly? And the answer here is no. We are in a separate cycle here. in a complete separate cycle with ending of extreme divergence, which means too much money get involved suddenly. A warning sign. Now, if that's the case, and that's a cycle by itself, we can get it going down to 50%, which is 128. You heard of this 128 from me for I don't know how many times. It's a zone, of course. It could be 128, 129 even would be enough. But the bottom line is that there is a good chance that the bears are not yet done. Okay? That's what the market is trying to tell us. Now, technically, we are aiming the 128 on the short term. From there, yes, we are going to be ultra bullish in our expectations. But currently, let's take a look what's happening here. We had triple cycle down, right? And now we are in kind of attempt for a corrective cycle, which is with a break of the top here, break of the bottom here. It's a range, but look how many false breaks it's making here. This is why I say this is a eraser mode. Eraser mode. What looks like the next momentum turns to be a fake one. So for the pound dollar, everything here is possible, but I am yet in a bearish direction. As long as we have no clear close and hold above this area, which is the 133 zone, 133.20. So pound could crash from here, pound could make one more shake and crash from there. For me, it's the current momentum, the short-term momentum is bearish, and if we do get the 128 surrounding, I'm going to switch big time for buys. Not blindly, I'm not going to attack the level because it looks okay. Of course, we're going to wait for good setups there. But the level is yummy. So that's my view for the pound dollar. Okay. It's technically called both because for long run we want to look for buys the bottoms. For short term, we are still bearish, and our current momentum on the current period is yet bearish. Keep an eye on the news for Britain. Too many news that could simply trigger any of the directions. That's for the pound dollar. Our next one, pound yen, remains bearish as well as long as we are below this top. Okay, our expectations, I'll make it very simple because it is simple. Our expectations 146, the 50% of that also would be a magnet zone if it develops the way we want. This is exactly where a duplication falls. So if we reach there, it could be classical level. And the next one would be the 38.2 of the weekly cycle, which is 142. As long as we are below this top of 152, this high, the pressure of this pair is bearish. Every rally should be considered as a sell opportunity. Pound versus the franc, same story. Holds the new false break. We don't have though any convergence, any triple wave down. So for this pair, even though that we prefer the sells, both directions are in play. Why? Once again, I want to answer that the difference between the pound dollar and pound franc. Look, that was the triple cycle for the pound franc, which means technically we are to 50%. This is 136. We do have a bounce of the double cycle towards 38.2. On a daily chart, we can even call it a kind of attempt of triple. 1, 2, 3. This is also a double cycle by itself. So technically we have all the reasons for this correction down. But in order for it to be legal correction down, we need false breaks on 4 hour or the 1 hour. Do we have a false break on 4 hour on the 1 hour? No. No. Do we have 3 waves down on the 4 hour or the 1 hour? No. So we don't have any bearish evidences for the longer run. And that's why both directions are completely tradable and acceptable for pound franc, because we do have possible levels for short-term retraces on the weekly and daily, but we don't have the call for a change. And if we don't have call for a change for the longer term cycle, that means that these double waves down, which are by the way also not correct because we don't have 2 candles rule, right? These are the last 2 candles. We never got 2 waves here yet. So you can see the conditions, guys. The conditions are not good. Not good. And that means that this trade for swing trading, mid or swing trading timeframes is simply not good. This kind of pair are usable only on the intraday, short-term and intraday trading, just because of the volatility. And where the volatility comes from, by the way, guys, the levels. We do have the level on weekly, we do have the level on daily. That's why we have the volatility there. That's why we have fast moves. That's exactly why. And that's why the only way to enjoy from these moves is on intraday. Because for medium and swing trading, it's simply not good yet. Pound Kiwi did provide us here a triple cycle, called special triple as you wish. We need 1, 2, and we can start looking for the sells. It could also turn to be a range for us here with this stop, and then we'll be looking for the sells. So pound Kiwi is currently in a bearish momentum, which means sell the rallies versus this top. Okay, and our targets for the short view are this. We have the whole cycle here, 38.2 and 50 would be our levels. So 186 zone and then 184 zone. Okay. So pound Kiwi does have a clearer scenario, and it's bearish on the short term. Invalidation here. Pound Aussie. According to weekly cycle, we should get going at least to 38.2, which is 182. Which means we are bullish for the long run, right? On the short run, look what we've had. 1, 2, 3, 1, 2. That means bearish pressure could be on, right, for a correction. But because the weekly is still bullish, every 2 waves down on daily or 4-hour chart considered to be buy opportunity, as long as they are 2 waves, right? Do we have 2 waves down here? We had only here. That was the case for us. Do we have anything since then? No. Right? The only thing we do have here is a false break on this top and a false break on this bottom, which in extended way create for us here a possibility for range. That's the only thing we have, which means on the short term we still need on the long term we still need 2 waves down or bottom of the range to buy, right? Which, since we don't have them, the only way for us is to look for intraday short-term opportunities, and that would be sells from possible tops. That's the only thing for us. The bottom line, pound Aussie, after all the noise and clearance from previous week, returns to be bullish for the long run, with no false breaks, convergences, or anything like that to stop the weekly sign. Not yet. Okay, so basically that's what it is. On the long term, we are after buys. For buys, we need two waves down. Since we don't have them, we can go and look for them on the short view. And we do have this top. This was a one false break. We might get the revisit here, and from there mark this trend line breakout, and this is our possible short term sells. Okay, now it will be good to look for these opportunities around the tops. Pound Canadian, nothing clear here. Completely nothing. No false breaks, no convergence, no three waves down on the 4-hour chart. Let's see the 1-hour chart. Nothing. Simply nothing. Okay, so that means that for long run we remain bullish. Bullish because of the weekly cycle, of course. Short term doesn't have anything controversial for us. Sorry, that's not the case. This is the correct. And that means we are aiming the 50%. 183. Pound CAD, bullish for the long run. We need two waves down to buy. Do we have any two waves down here, guys, yet? No. Not yet. Let's check here. Just a second. Let's check here. Maybe we do. Just a second. Oh, yeah, we do. This is our top of the last two candles. Sorry. We do have two waves, guys. 1, 2. I missed that as well. Okay. And we got a breakout here, which means this is 1, 2. Which means we are good for possible buys scenarios. Okay, for the pound versus the Canadian. This trend line was broken. It's good. We need to gain momentums, right? Now this is our current momentumal trend line. Correct. So if we go above that and the highs, we are in very good conditions. Also falls back on the bottoms here on the 1-hour chart, bullish divergence. Yep, it looks good. Break above that and we are bullish. And we are bullish. In that case, if it happens, by the way, that's a very good bullish call for further run up. Now look what happens here, guys. One falls back on the bottom, one falls back on the top, which means we are going at least to the top of the range, which is 175. A lot of potential pips are lying down on this possible trade. So the bottom line, break of this trend line, break above this high, brings us the buy opportunity. That's for the pound Canadian. The best pairs from the pounds as we saw them, pound dollar, pound yen looks good. Pound kiwi looks very good technically. The rest are very tricky. Pound Canadian is a great potential one to be formed. If it doesn't form that and doesn't gain the momentum by higher highs and trendline breakout, then there is a good chance we are going to develop something deeper here. 1 and 2, possibly. So let's see what we can get here. Any questions about the pounds? You can see yourself here, guys. It's very, very clear that when the moves are clear and clean, when the cycles are clear and clean, that means the big money is playing, and that's where we find the opportunities. When the cycles are not clear and not readable, that means the big money is not playing inside, and that's where normally erasers period come in. too many zigzags, too many spikes, too many everything, too many noise, which makes it simply untradeable. So if you have a clear cycle, a clear read, good. Big money is there. That's where our chance to make money is getting bigger. If it's not there yet, it cannot help us. Cool. So we are done with the pounds. Let's go to the Pacifics. New Zealandian dollar. We are looking for 2 waves down. Let's see if we got 2 waves down here. Still nothing. Still nothing. We need 2 clear waves down. This is not a good correction. This is not a good correction. No, nothing yet. So for buys, we need 2 waves down on the 4-hour or the 1-hour and a breakout. And then we are good for buys. As long as it did not happen, this pair, because the daily chart did not have any divergence, I remind you. Okay, we don't have any divergence on the ending cycle. This pair could take us all the way to a new low. So for us, we are back to both direction. 1 false break, 2 false breaks. If we get below here, the momentum returns to be bearish. Currently, both directions are tradable versus this top. We can look for the short-term sells, expecting new low according to the daily cycle. If it does develop to be 2 waves, which means 1, 2, and breakout, it validates this scenario. Double wave correction towards the 070 zone. Yep, Matt's erasers is cleaners, right? In other words, the words that we all know them, stop hunting. That's exactly what it is. Too many empty spikes, too many empty attempts. Exactly. That's what it is. And it happens when you don't see the clear cycles. Clear cycles means no big money inside. No big money inside means too easy to manipulate by heavy machines. Okay. New Zealandian dollar currently returns to bearish momentum versus this top. If we do have 2 waves and breakout, we returned for a short-term rally for deeper ways down. As long as it didn't happen, we expect this pair to take us to a bearish journey, maybe for new bottom. Aussie dollar. Now this one is classical. On previous week we discussed about this one, guys. How many times? 3, 4 times. By calling timing. Remember the timing lessons from previous week? Here is the proof. The levels from weekly looks amazing. Bullish hidden. What do we need more? Daily was bullish basic divergence. What do we need more? Right? So we do have a level. We do have confirmation, but we never got a setup. Setup means we never got fallback with convergence. We never got 3 waves up to down for a breakout. In simple words, that means that the bearish pressure never, ever yet ended. I still think that 075, 076 would be the final low, and this is exactly why. We do approach the duplication area. So the closer we can get to 075 and the closer we can get to the prior bank zone, which was respected once, the closer we can get there, the bigger the bullish pressure would start to be. So Aussie dollar, technically we're in both directions, but on the short term we are for sells. We are yet after sells. We never finished these sells from the last couple of weeks yet. For longer run, we will be looking only for buys, of course, but we are not there yet. Not there yet. Therefore, our bearish pressure, our bearish journey is on play. Aussie Kiwi, the cross in between, did for us a very good move down, does not yet provide any reasons to stop it. So the Aussie Kiwi for short term is yet bearish while below this invalidation. Rallies in 2 waves on 4 hour or 1 hour should be sold. Right? So we are still in a preferences for bearish, aiming the targets of 109.50 down to 108.50. Aussie franc continues to play inside the daily range. Nothing changed here. Both directions are completely tradable with the current momentum of these last 2 waves breakout remains bearish. So no change for us here. Aussie CAD, Sarah, I explained it on the last week, and I told you that as long as we are inside this 1 candle range, for me that's not tradable conditions. But I prefer the sell direction in that situations because we don't simply have any bullish evidences in this drop, which keeps it bearish. As long as we are inside this 1 candle, for me it's non-tradable, and this is why this pair does not appear in our report. It's simply not good. Yen pairs, dollar yen we discussed, euro yen we discussed, pound yen we discussed, Aussie yen remains bearish. We are aiming our 50% next. 38 we did our target. So we reached our target on here. Now we are aiming here. This is 86 zone. And later on, if the bearish momentum continues, we are going to 85. So bearish pressure remains on. No bullish evidences, no false breaks, no convergences, no triple rallies, nothing. Yet bearish it is. New Zealandian yen, same story. No bullish evidence. We are in daily levels and on weekly levels. So we can easily see this pair making very good new lows. No bullish evidences yet. 4-hour chart was very clear for us. We didn't get 3 waves up. What we did was 2 waves up with bearish divergence. If it's 2 waves up and not triple wave up, this is considered to be only a correction, which means it's bearish. Invalidation on the short term is here. That's for the yen pairs. CAD yen, same story, remains bearish with invalidation here. Expectations for the targets, double cycle 38.2, which was once reached, the first target. And since we didn't have any bullish divergence yet, we do expect continuation. The next logical level would be 86 zone, which is the 50%, and then 38.2 of the weekly cycle, which is 85.20. Okay, so bearish pressure is still on. This is our invalidation. And the last one, CAD versus the franc. We continue to give nothing, completely in both directions tradable. Generally bullish because we didn't have these 2 waves and these low respects. I have only one problem with that. We never managed to get higher highs. This is a sign that we can easily see this pair correcting towards 32 down to 50 of the triple cycle from daily, which makes this pair to be clearly acceptable only for short-term trading, not for long-term yet. We don't yet have well, correlated move between the weekly cycle and the daily cycle. Therefore, only short-term trading is in play, and it's in both directions. Can we say this pair is really good? Look at that. Look at all these moves, guys. If you love to scalp, this could be a great one for you. Just because of these huge candles which make it boom, 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 flying on immediate impact. But for mid and long-term trading, this pair is, from my point of view, out of play. We are done with forex, moving on to the gold and silver, and let's make it very, very simple. Gold remains bullish for us as long as we are above this bottom. Silver remains bullish for us as long as we are above this bottom. Okay, just very, very simple. Don't want to complicate these things and cycles. Very simple. Natural gas, we continue to fly. We are aiming the top of the weekly range on the short term. And on the long term, well, I showed you the monthly, right? We can get it here. We should get it there, around 7 and higher. So as investment, it's a gift opportunity from my point of view. Do not trade contracts because they are rolled overs. Trade the spot, pure spot. Oil reached critical levels. No bearish evidences. Remains bullish. Every drop down into waves is a buy opportunity. Target we are aiming is the zone of 60 after we broke the 54. Now I want to remind you guys, we are long from here. Since this moment, we never got any bearish evidence. As long as we don't have any bearish evidence, bearish proofs, bearish reasons, we continue in a bullish direction. And now I saw so many requests here already about the indices. Indices, guys, from last week we broke here for lower lows. That was the S&P. Dow Jones did the same with this low. They all show the signs. They all are so tricky. Choose the one you want to deal with. Maximum 2 and split your risk. What do I mean by splitting the risk? If you want to get involved with all the 2, 3, 4 indices and your risk is normally 1% per trade, split it. So you risk in total 1% for all the indices. Why? Just because they all provide, the ones that we have on the list, provide the same setup exactly by false breaks and convergence. When it's exactly the same, it's time to be careful. Okay, if it was different conditions, cycles and levels and setups, I would say no problem, go and enjoy. But since we all of them following the same exactly scenarios on the same timing, it's time to be careful. So we are bearish as long as this top holds for all of them. The last top we have, Dow Jones, S&P, this is the top, and of course the Japanese Nikkei. As long as this top holds, it is in a bearish mode. From previous week, it's not changed, so you can find the targets from our report. It will be included in the report, of course, all the targets, but basically it's simple. We have this first cycle and the next big cycle. So targets could be monster here. The one that the next that joined this party, German, no. Where is my UK here? Is the UK, who now gives us this convergence. Now this convergence isn't relevant on the daily cycle because it never broke this top, but it is relevant on the 4-hour chart correction, which is here. And now it's also on the 1-hour chart triple cycle by itself. 1, 2, 3, and we'll see that on the 1-hour chart. We do have the lower lows principles here, which means we are bearish as long as this stop holds. Okay. According to the weekly, we are still aiming this big cycle correction, of course. So as a potential, it's a monster. We don't want to overexpose them all, and this is the bottom line here, guys, and I want you to remember that. Too easy to get sucked into that, to dream big and say, but if it crashes, we do monster profits. It's true, but it's much easier to make monster losses. So instead of do that and regret, split your risks among all the indices you want to get involved with, and we have the best: S&P, Dow Jones, Nikkei, and the UK 100. They are the best we have. You choose the one that you want to get involved with, and risk is split among them all. As per our where is it? CFDs, Deutsche Bank, where is our beauty Deutsche, continues finally some rally. We are aiming our next target. Here we are. Okay, right here. We are on 38.2, cashed out partial already on the previous rally, right, which we got here. This is a great place for another cash out, but the final target for us will be here, the 50, which is 16.50. Our invalidation for the buys, for our buys we hold, is still this bottom, which actually now moves on. Why? Because we did have higher highs, lower lows attempt, which was false. So our stop loss is live trailed now to here. Invalidation for the buys. Our bullish run continues and goes beautifully. Nike is another one we got involved with, cashed out partial. This is our entry. Stop loss still on break even. No other invalidation levels that we got ready. Bullish. Partial targets was closed slightly before the 54. Our final target 59, the top of this range. So this one is unchanged. And the last one, which got us in play previous week, was Kraft Heinz, which is also moving beautifully. And our targets are 50% of this leg. That's 81, 82 zone, and then the big leg here. 82, 84, 86. Destination for the Kraft Heinz. Okay. Invalidation, of course, the last low. That's all, guys. That's all. We are on. How long we are on? 140, 1 hour and 40. Wow, you are heroes. Any questions, guys? Any question about any of the instruments we discussed? This is how we build our plans, guys. Bitcoin. Come on, Akos, on the weekly video. I published that just 2 days ago. I'm bearish there. I discussed about it. By the way, the previous week suggested the altcoins paid amazingly. We have it there beautifully. Guys, this is what we do. We define directions, validation, invalidation. We rate our positions. What is considered to be safe? What is considered to be risky, as you saw, according to the levels we have, to the cycles we have. Trading is listening to the story the market is telling us. We listen carefully, we can decide carefully. We rush, we can crush. That's what it is. So, once again, for those who recently joined, go over the report which will be published with you within a couple or triple hours when I finish to update everything. Watch the video, watch these webinars on your free time, and you would be on a track with us. Remember, step by step, learn everything, ask everything. We are available everywhere on all the channels. You can find me and my team everywhere. Okay, so that's all. Thank you very much for your time, and I wish everyone a big welcome for new guys on the club, and big thank you for everyone who attended. Wonderful week to all, and thank you for your time. Bye for now, guys.